Welcome back to series of Unraveling the Secrets to Wealth. In this episode, we're uncovering the real truth about investing, how it works, why it's not as risky as you think, and how you can use it to grow your wealth over time. Many people hesitate to invest because they fear losing money or find it too complex. But here's the reality. Investing is one of the most powerful tools for financial success, and you don't need a fortune to get started. By the end of this episode, you'll understand different types of investments, how to manage risk, and how to build wealth with confidence. What does investing really mean, and why should you care? At its core, investing is about making your money work for you instead of just sitting in a bank account. Unlike saving, where your money remains the same, investing allows your wealth to grow over time. But how does that happen? Simple. When you invest, you're putting money into assets like stocks, bonds, or funds that have the potential to increase in value. The key is choosing the right investments and knowing how to manage them wisely. Now, let's explore the most common ways people invest and how they can fit into your financial future. Investing in stocks. How owning a piece of a company can build wealth. When most people think of investing, they think of stocks. Buying a stock means you own a small share of a company. If the company does well, your stock's value increases, and you make money. However, stocks can be unpredictable. Some days they go up, some days they go down. The key is understanding how to evaluate companies before investing, what makes a stock a smart long-term investment, how to find blue-chip stocks that offer stability and growth with the right approach. Stocks can be a powerful wealth-building tool even with small investments. Investing in bonds. A lower-risk option for steady and predictable returns. If stocks feel too risky, bonds might be a better fit for you. When you invest in bonds, you're lending money to a company or government. In return, they pay you regular interest. Why do people invest in bonds? They offer lower risk compared to stocks. They provide steady and predictable income. They help balance out a riskier investment portfolio. Bonds can be a great way to protect your wealth while still earning a return. We'll break down the different types of bonds and when they make sense for your financial strategy. Mutual funds and ETFs. The easiest way to diversify without picking individual stocks. If you don't want to research individual stocks or bonds, mutual funds and ETFs, exchange-traded funds, are excellent alternatives. What's the difference? Mutual funds. Professionally managed funds that invest in a mix of stocks and bonds. ETFs. Similar to mutual funds, but they trade on the stock market like individual stocks. These investment vehicles allow you to own a diversified mix of assets without having to pick each investment yourself. This spreads out risk and makes growing wealth easier. The power of diversification. Why putting all your money in one place is risky. One of the biggest mistakes new investors make. Investing all their money in one thing. Diversification is the strategy of spreading your money across different types of investment, stocks, bonds, real estate, and funds, so that if one performs poorly, others can help balance it out. Why is diversification important? It reduces risk. You're not dependent on one asset. It creates stability. Different investments react differently to market changes. It boosts long-term growth. You're positioned for gains in multiple areas. A well-diversified portfolio can help protect and grow your money over time no matter what the market does. Understanding compound interest. How your money can multiply on its own. One of the most powerful forces in investing is compounding. This happens when your investments earn returns, and then those returns start earning more returns. Example, if you invest $100 and it earns 10%, you now have $110. Next year, that $110 earns another 10%, growing to $121. Over time, this process snowballs into significant wealth. The earlier you start investing, the more time your money has to compound. So don't wait. Final takeaways. How to start investing with confidence today. By now you understand. Investing isn't as complicated as it seems. Stocks, bonds, mutual funds, and ETFs all play different roles in building wealth. Diversification and compounding are key to long-term success. The most important step. Get started. You don't need thousands of dollars. Just begin with what you have. Stay consistent and let time do the rest. If you found this episode valuable, hit that subscribe button and join our Capital Insights community. In the next episode, we'll teach you how to manage investment risks like a professional. From diversification to stop-loss orders and emergency funds, you'll learn proven strategies to safeguard your wealth, no matter what the market does. Don't miss it. Hit that subscribe button now. See you in episode 3.